We are now hitting the internet on the live stream of the TA report for April 10th, 2022. Bags, GP are now all
Welcome,
back.
welcome.
We're still waiting on Nick. I need to call and check on Nick. I haven't heard about Nick to see how Homeboy's doing, make sure he's okay. But Nick went on a family trip, so we hope everything's great there. GP, we were just saying how terrible the weekly closes were on some names. Disappointing to me, Simmy's obviously. After we were so excited about how well we thought they might be setting up, but from sometimes false moves come fast moves.
Yeah, I agree, and I look out there and people are like, oh well, we had 3 up weeks and 1 down week, and they're looking at the indices. But if we're looking at individual stocks, we had 1 up week, and then maybe Apple, maybe a handful of names had 2 up weeks, but a lot of the beaten up names had 1 big up week, and then 3 weeks of sideways, right? Like, so the indices might have pumped, but a lot of stocks didn't. So that, and then they broke down, but not like a breakdown, just enough to piss you off and bury you up, right? Like it was, slight breaks, like Amazon broke after a solid, huge move. Amazon broke the 50 SMA, right? Rejected the 200 SMA twice and then broke the 50 SMA without even flinching. And we were just talking about this right before we went live. It was another week, and it's been going on for months now, that every single call expiry in so many of these names expire worthless, and all the puts expire in the money. Not all of the ones, not the heavy OI ones, but a ton of OI. So people are getting paid on puts consistently. And if you're looking at the action, as soon as we get to a resistance, you're seeing big dogs coming in and selling calls, right? Like, so resistance comes in, they sell calls, and the stock goes down. It's been happening for months now, and it still happened this week. They came in on Amazon. I was watching specifically because that was the kind of one I had on breakout watch, and it got to that 200 SMA, and they started buying massive, deep in the money put spreads, right? Like when it was at 33.60, they were buying 34.70, 34.90 put spreads. And I'm talking about 2-3 days out, not like months out. This is 2-3 days out. So they know that the market's in a precarious position. So we get to that point of resistance, and they're just collecting premiums, right? Like it's all day, every day. And then kind of like a self-fulfilling prophecy, you buy puts or put spreads, they're deep in the money. They're not like making thousands and thousands of percents. They're doing the deep in the money, and they're kind of hedging really well in terms of resistance. So they're just collecting these put spread premiums consistently, until the market has the clarity to kind of break higher. And if you're looking at some of these, this is the exact same kind of price action that happened the week before March UpX, right? In a lot of names, we closed at literally the lows of the week on Friday. Monday we opened up, and it was just kind of straight down, and then Tuesday we kind of took off like a bat out of hell, and that was literally the big move that started. So my thought process here is we're going to probably come into the CPI data on Tuesday, where everyone is expecting the worst CPI numbers in 40 years, and we may or may not get them. And I think we rally higher. This also, if you're looking at this bounce off that kind of that March pre-OPEX move, this is also part of the ABC correction, right? And definitely the SPY looks a ton better than the Qs, and the Dow looks better than the Qs. But if you're kind of looking at this, you could potentially see a inverse kind of head and shoulders, right? From that Feb kind of low, and it's kind of setting up. And ABC correction in an uptrend before it starts the next leg up. You could call it the wave 3 or whatever you want to call it. It usually has a dirty kind of pullback in the ABC correction to about 50% to 61.8 retrace. If it holds that, it becomes pretty powerful on the upside. So that's what I'm kind of watching for on the Qs. That's approximately around like 340 to 344. I'm expecting a terrible Monday, to be honest, but I'm not expecting a terrible UpX, if that makes sense.
So if you're looking at 340 area, I mean, that's a hit of about 2.5% there, GP. I know that would, people who got all bulled up, I mean, myself included, right here, that could shake quite a few people out, right? I mean, you're coming in and basically checking like this level. So that could shake some people out, because here we go, we're retesting the low again. And anything's possible. We were just saying, before we started the call, that anything's possible in this market right now. And if a retest of the lows comes, I think then you're really going to have people panic selling and trying to get out.
If we break those lows, like I would say the January UpX lows versus like that kind of rounded bottom here, the January UpX lows or post UpX lows, that capitulation.
So you're even like right here, like 3.
Yeah, I am. That's kind of where that's been my capitulation candle since we talked about it, right?
Yeah, I don't disagree with that at all.
We've tried to break that level, 1, 2, 3, 4 times, and each time in came the bulls and saved it. So if you don't save it here, I don't think there's much saving it going down, right? But you have to remember the technical damage is massive, and we've talked about this on almost every call. This is not going to be the V-shaped kind of recovery. This is going to grind you out and wear you out and keep you bull if it's going to recover to the upside. I think there's already pieces of inflation data. So what I would say is, if you're looking at this from a psychology perspective, we've had the most insane amount of bearish news for months now, like months and months and months. And we can't break that kind of January capitulation low, right? So I would say the risk reward here is to the upside for me. Still, price action is miserable, and every time I think something's going to break out, it just fails miserably. But this is part of I'm going to wear you out psychologically. So when it does break out, you don't believe it, and then you're chasing on the way up.
Well, what worries me, and you led me into this while we were getting ready to go live, was we were all bulled up on semis last week, and they looked really good to come out of this. But now, I mean, they're already below that January low. So that concerns me a little bit, GP. And I'm a bull's bull, right? Like I don't make any bones about it. I think price is going to be going up over the long term, but to me, semis kind of have, this area as a defense line to me. You can convince me maybe a little bit lower, but
convince you to look at volume.
Well, I leave volume on this chart format just for you.
Right. So like if you go to like the half day charts on these versus like the full day charts, you'll see that the volume on these are pretty high on the upsides, right? So, and very low on the kind of the downsides. So we were talking about this before we started the live piece, which is, I think it has a lot to do with dealer positioning and not much to do with like the market dynamics, if you know what I mean. Like they're not selling out of this stuff. They're buying into it, and they're hedging their buys by selling calls for or puts, spreads, or whatever you want to call it. When it gets to resistance, they're essentially bringing down their cost basis, right? By doing this, you're in a you can be bearish, you can be bullish, you can be everything. But since June of 2021, we are the same damn price. Like, you can tell me all you want about bulls and bears, but you haven't proven shit. Sorry, pardon the language, right? But you haven't proven anything. So you can be on either side, and maybe we do break, and then you're
Yeah.
right. That's fantastic. But as of now, we are sideways.
Yeah.
We haven't done anything in almost a year. So for you to
Well,
call
in
one
the semis, I mean, you're basically flat since December.
Right. And look at where the volume
2020.
is, right? Look at where the volume is, not where the volume has shown up on the downside, not on the, and not breaking, right? So to me, this is reaccumulation in an uptrend, is what I'm seeing it as. If it breaks down, then that's what it is. But you haven't proven anything.
Well, I certainly hope you're right, because I mean, it's well documented how I feel about the semis, right? Like, it's hard for tech, and it's hard for growth to really get going if semis are leading you down.
Yeah. So like what you also have to look at, right? Like you could potentially see a head and shoulders there. That's a weekly, right?
Yep.
Head and shoulders here. But typically how head and shoulders kind of work is the volume, the capitulation volume comes in on the left shoulder or the head, because people are completely cashing out of this massive move. It doesn't come in on the right shoulder. That's kind of how right? Like, they've already distributed out on the left and the head because they want the best prices for their buys. They're not trying to sell down here.
Yeah, so, and this isn't the cleanest. I mean, this isn't like a classical head and shoulders pattern, but it is.
No, it failed a while ago, but everyone likes talking about head and shoulders, so I figured I'd talk about it.
Yeah, for sure, right? For sure.
And same with the Qs, right? If you bring up the Qs, it's not the head and shoulders didn't work, right? Like, it already kind of, it failed the breakdown of potentially a head and
I mean, there's going to be somebody out there who's going to say this is, but it's not. Like, I mean, it's the pattern has
look at where
has that shape, but it's not a classical head and shoulders.
And the volume is coming in after a 23% decline in the Qs, not before it declines, right? So unless there's something that I don't know, most people who are fund managers and money managers and managing tons of money aren't selling on the way down, right? Like, they're selling on the way up.
Yeah, for sure.
So that's kind of like, we can take a look at, I guess Boeing's a good example of a head and shoulders that did work out, right? It's one of the few head and shoulders, if you go on a weekly and just kind of expand out, right? Like, look at where that volume showed up. It showed up at the head, right at the top of the head, right? Forget the COVID volume, that went nuts. But if you were looking at the volume before that, where did the volume show up? It showed up at the head. They're coming out, and as it was breaking down, look at where the volume then showed up. It showed up at the bottoming part of Boeing, right? So it's just something you have to keep in mind.
Yeah, no, that's good stuff, GP. Yeah. I flashed over here to the VIX real quick. If you've been keeping up with me on Stock Twits for the last little bit, I haven't been posting as much. I've been, doing some other things. And I haven't been able to pay as much attention to the market as I normally have. But the VIX, I mean, to me, it's still keeping that sort of rounded shape, right? And would it be surprising to see a big CPI print and be, up in this 25 area? It wouldn't. But still, at some point, it may not be immediate, but this is going to want to break. And I don't mean break to the upside. I mean break to the downside, because just as we've talked about, in my opinion, just as we talked about in the past, price will test an area until it finally fails the area or break through it. And I think the more times it tests an area, basically the weaker it gets and it's going to fail. If it takes more than 3 or 4 times to break through, in my opinion, eventually it's going to fail. So I think that's just the way I'm looking at the VIX. Is, to me, it just seems like this has more opportunity to break down than break out.
I agree with you on the VIX. What was concerning for me, I know you were busy doing stuff on Friday, so you didn't get to pay attention to it as much. As I was watching the price action, the VIX was being weak, yet tech was also being weak.
Yeah.
So that was the concern for me, that tech couldn't break out to the upside, even while VIX was sitting on massive, like the 200-week SMA support, on all this other support, that we couldn't see it break out. So my concern is, if VIX doesn't break down and finds the support to bounce from, tech has a lot further to go.
This comes full circle to what we were talking about, looking at semis, looking at Bitcoin just before we went on. Like, even the VIX, I will put in this case, is nothing looks great, but nothing looks completely terrible either. The VIX is still holding on to the daily 9 EMA. It's below everything else. So not a good look. I would probably, again, I would favor that to the downside, but I look at, the Qs, and it's below everything, but it hasn't broken sort of that 340 support area. So, there's a lot of mixed signals. And as I've written about in the past, when there's mixed signals, I'm fine to just sit it out and watch. I have the luxury to do that. Not everybody does. I know you trade way more frequently than I do, GP, but it's just not something that I'm ready to, put additional money to work. And I'm not so scared that I'm pulling money out, right?
Yeah, I think that's the thing, right? So if you put money to work now, you could potentially not see it do anything for a couple of years. We could just be in this broad-based range for multiple years, right? You had this massive expansion candle kind of for the year in 2020, and we just could be consolidating gains for the next couple of years, right? We could have this argument on bulls and bears and bulls and bears consistently, but when it's like a full-on bear market, you don't see what energy is doing, right? Like, you see everything break down, right? Like, if it's
I did add a little bit of, I've been accumulating some XLG and then some XPXL. I did accumulate a little bit of that, and it was darn near this low, but I did that knowing good and well that, it could come in a little bit lower and I'm going to get a better price. So those are more dollar cost averaging, not that I'm necessarily initiating those buys with a specific set time in mind. But at the same time, like, I realize that I have room to scale in lower. I want to scale in lower, and I want to have and keep a buy program in place. So I think it's all in how, for me and others like me, the long-term investor, is how you're perceiving the market in the future, not, basically on April 7th or April 6th of this past week.
And everything that you're reading about the markets, it's all priced in. There's not, for the markets to kind of, to me, for the markets to break down, you have to have something that's not priced in, right? That's what's got to come in. Like, you got to, I don't know, like a bigger war or something like that. But even that gets kind of priced in, because we've been in war, Ukraine and Russia, for a couple of months now, right? So people are starting to price in worst case outcomes, best case outcomes, all that kind of stuff. So you need to see something that's completely out of the blue for us to really break down here, personally. But that's
so. Shout out to Randy. He says he's our stalker, but we don't care. We appreciate you, Randy. Wiggly on Stock Twits. He says sentiments are ruling the market. I completely agree. Why not buy defensives and get some dividends? Well, that's kind of the way I look at XLG, right? XLG is the top 50 of the S&P 500, and I'm getting about a 1% yield. Now, could I find something with more yield? Absolutely. But long-term, do I feel absolutely safe with the top 50 of the S&P? 1000% I do.
Yeah, but I'm also not buying ExxonMobil that's
Yeah.
going bananas, right? So I did buy some dividend. I bought HD, right? It's a couple of percent dividend. It's in a cycle where seasonality starts to pick up. So I'm not chasing the dividend plays that have been super strong for months now. Maybe they
You took some
continue
Home
going.
Depot, you said?
Yeah,
Yeah, nice.
right? So it's coming into seasonality. It broke pivot 2 days in a row, but didn't close below the pivot either day, right? So that was my entry right around 298.40, maybe a couple, like maybe 30 cents higher or whatever it was. But it's coming into seasonality. People are the housing
Yep.
market is hot. There's a supply. People are fixing up their older homes. So I'm personally in the camp that HD, Home Depot, or Lowe's, either one, are going to benefit from this trend, at least in
Yeah,
the
I
next
think it's
year.
hard to go wrong with either one, honestly.
And it's got a dividend. So like I'm not chasing these semi-parabolic moves in dividends just for a dividend, right? Like I don't want a 4% dividend and take a 30% haircut on price. Like that, like what's the point?
Yep.
So like yeah, and it can continue breaking out. Great. It's just not something I'm gonna
Well,
chase.
I think, it was either last week or the week before last. I had mentioned on Stock Twits that I really like retail. And Target got a pop, Home Depot got a pop. I mean, Walmart was running there for a bit. I mean, look at Walmart, and that's
Costco.
a big move from Walmart. Costco too. I pointed out Costco. I thought would be like a 640, 650. I mean, it closed above 600.
Pull up Dollar General. It's all the inflation kind of stocks that are
Yeah,
now running. They're running one after the other. If you haven't noticed, right? Like
yeah. So
so, if you pull up Dollar
I
General,
liked
it's
retail a couple of weeks ago when it was making this space right here, and that's Costco. But overall, I think that's a pretty good place if
yeah, and
I wanted some
automobile
more
too, right?
dividend exposure, to look at a Home Depot, look at a Lowe's. You can't beat Costco. Costco is one of the best companies in the United States, if not the world. So you kind of it's these opportunities that you have to understand what you're holding and why you're holding it, right? That's, again, from the long-term perspective.
Yeah, and if they're the strength right now is in the retail kind of inflationary stocks, Dollar General, Target, Walmart, Costco. If you're looking in the car space, it's O'Reilly, ORLY, AutoZone, across the board, right? Like if you're looking at those, that's where the strength is showing up.
Yeah, I want to
So
look at my target chart here that I had and see how I want to cry coming out of that channel. Um, you know, I had every opportunity in the world to take some down here, but coulda, woulda, shoulda, didn't.
but the false breakdown, right? That's the
Yeah,
thing.
yeah,
It had
yeah.
the false breakdown and then reversed higher.
Yeah,
And
food's been good, Randy. You're absolutely right. Kroger, SFM. I'm not as familiar with that one.
yep, Sprouts.
Sprouts. Yeah, I mean, yeah, absolutely. So which leads me back to one of our favorite names,
But this
Amazon.
but this discount retailer is not getting any love, right? So can someone explain that one to me, right? This is the perennial discount retailer. You don't even have to leave your home.
I know. And not just from the grocery play, right? Whole Foods is definitely part of Amazon, and it's probably not as big as revenue source as other areas of Amazon, but you can get everything on Amazon, right? And we all know that the AWS portion of the balance sheet is only growing, but at the same time, like, why is this a stick in the mud, GP?
I don't know, right? So this is the Google conversation, right? They know a split's coming. They're gonna milk all the premiums they can. Got to a resistance. 200 SMA, and they sold calls or bought in the money puts because it's a widely owned stock. It's going to take a huge thing to make it move, and why not collect premiums in the meantime while it's going sideways? But that was the thing, right? You see Costco and Walmart running, but Amazon not.
Yep.
So there's a bit of a bifurcation on what's going on in terms of what makes sense to me, but
Well, I like RSI, and I like looking at the divergences. I mean, RSI has been just steadily sloping down, basically since June, since it took off, right? June of May of 2020. I think we're coming to a resolution of that, though. It's either going to have to break out or it's going to break down further.
And so if you're looking at the RSI, because I was looking at this, right? Like if you go to a daily, it's the same ABC correction in an uptrend, right? It bounced from 2671 to 3416. It was a 700 and something point move, which is pretty massive for any stock in a couple of weeks. And it had an ABC correction off the 3416. It hit the 200 SMA, closed above it, came back down, tried to break above it again, and then had the move down, right? So yeah, you can see it. And then now it's coming back right into that base kind of support, and the 50% retrace from the bottom to the high is around 30.44.
And so this is why people get tired and bored in their trade, right? We know nothing has fundamentally changed about Amazon or its business, and sure they have the union votes going on, but that's not going to affect the bottom line by a huge number. Now, you might say that the shipping cost, right, transportation cost, and the gas or petroleum they're using is hurting. I haven't seen any numbers on that just yet, but at the same time, like nothing has really changed about what the company's doing or what the thesis in the company or my thesis is in the company. So I just don't want to get bored out of the trade. And and
the RSI is actually doing better, right? Like based on where the price is now, the weekly RSI is actually higher. So it's testing the base.
From the highs, it's still in that downtrend, but of 2022, it's actually doing better. You're right.
Right. So the relative strength on hitting 3416 was a lot more.
Shamsu, welcome. Uranium CCJ. Weren't you in some CCJ GP, or was that Nick?
No, that was Nick. I don't know. I just don't believe in any of this stuff, right? Like I'm happy that it's going up for everyone who's in it, but it's not part of my investment.
Yeah, I think somebody asked me a couple weeks back about URA.
Volume coming in after a 400% move higher. That's interesting.
Yeah, it's not. I'm with you, GP. I don't traditionally buy or try to trade things that I'm not at least knowledgeable of. But the chart looks pretty good. It's hard for me to argue that that's not a bullish chart.
No, there's no argument there.
Randy, Amazon needs to create some excitement by spinning off some divisions. It's a effing conglomerate. Well, that could be the case. I mean, there's been the rumor forever that AWS might get spun off, but
But then are you buying Amazon or are you buying AWS?
Yeah, exactly. Jassy is for the former head of AWS, and I think that would be hard for him. Maybe, I don't know. I'm guessing. I don't know Andy Jassy. It would be tough for him maybe to spin that out, but we'll see. It's not the first time that's been brought up as a solution for Amazon.
I think that's it's people who are like grasping at straws for something to happen, but Amazon does this consistently in its chart, right? It's just goes sideways, and then breaks out, right? So from 2013 or 2000, end of 2013 to almost 2015, did nothing, broke out. And then from end of 2015 to 2016, did nothing, and then broke out. And then, right, like it does this, it consolidates. It is looking like an inverse. I shared the chart last call, right? It is starting to look at, so I am concerned, don't get me wrong, on Amazon not being able to break out here, because it is starting to look like the inverse of 2020. But it's still holding pretty well, right? It's holding the 28.71 box. So you'd have to get back there and break down below there to really kind of accelerate to the downside. And the volume just kind of hasn't been there to suggest that it's more than just consolidation at this point.
I pulled up ARC. It's been a few weeks since we've talked about Kathy and the ARC Innovation Fund. There was quite a bit of bullishness over the past month about ARC, but I did pull up this chart late yesterday, and you can make that call for an inverse head and shoulders potentially, but it just looks weak to me. And I see what you're saying, like you mentioned on the Qs, GP, the volume, but at the same time, like there's nothing really super strong about this chart. It ran into the weekly 9, it popped above it, and then just failed. And again, I mean, we keep saying it, and somebody needs to get a tattoo of this, false moves make fast moves, and that seems to be what happened in this one. I would not be surprised to see this come back down in the mid 50s at all.
Yeah, and that's what chop is, right? Like it will test the bottom and the top of the ranges consistently to piss everyone off, right? That's what you could either call it the distribution cycle or the accumulation cycle. It gets to resistance, they sell calls, puts, whatever, and they wait for it to come back down, right? And then they start rebuying.
Well, what I wanted to point out is it's almost the same playbook, but just to a greater degree. You have an early week run up, you have a late week sell off. You have an early week run up, you have a late week sell off. And, that just, for me, and I know a lot of people just mentally, that is frustrating and unbearable to watch your count basically on a pogo stick for something that you want to stay in. And it's just a hard sector for me. And I've noticed in her disclosures in the funds buying and selling for the past, I don't know, 6 weeks or so or more, it's been putrid, just little puny buys. And they didn't even buy anything at all on Friday. That's the first time I can recall seeing that action from them. Normally, I mean, the past couple weeks, it's been buy 1 or 2 things, 3 things, maybe sell 1 thing. But there was nothing on Friday. They had no action on Friday. So that kind of, I think, I don't know. I don't want to speculate, but I just feel like if you think innovation is at such a discount, and you're not taking action on these deep red days like Friday was, to me, that doesn't sound like the most convincing sentiment from the ARC team.
Yeah, I don't disagree with that. Like not seeing the buys, it's been kind of interesting seeing that over the past couple of weeks. And it seems like they've run out of cash to invest, honestly. And if they need to have cash to invest, they're selling some of their top names, right? Like, so that's the death cycle. in terms of investing.
You sell your earners to double down on losers. That's never a good place to be, in my opinion.
Yeah.
but I wish her the best. I think I'm not a Kathy hater. We've talked about in the past how, in my opinion, I think there's need to be some humble pie maybe. But overall, like, I appreciate what she's done. And I think that innovation, I'm a huge tech holder, right? So I definitely believe in innovation, maybe not the same companies that she's in, but I think it's just I wish them the best and I hope they can get it turned around. One thing that I did think was really interesting was this thing, right? This total capital. If there's a potential inverse Head and Shoulders happening, then could there be a potential Head and Shoulders happening? Maybe. And if so, that could be fun to watch because I don't know. I have a real, we've talked about me not liking the short in the past or not feeling it. Like this short is basically, we're seeing everything Kathy does and we're taking the opposite end of that. And that just gets too personal for me.
Yeah, it seems like a vendetta trade, right?
Yeah, yeah.
And that being your investment thesis in general
Is not a good reason.
Also November, right? They waited pretty much till the highs to do it. And I get it. It's a trade, but to have an entire ETF created after it,
Yeah.
It does bother me in ways that, like,
yeah.
Do you see an inverse Ackman trade? Do you see an inverse ICANN trade, or right? Like the big dog, you don't see those.
Yeah. Yeah.
So
I don't like it. I don't like it, but
but that's ethics and morals, and Wall Street has none of those.
Right. Right. What else are you looking at, GP?
I am not looking at much, right? I did a lot of my buying in the lows. Now it's the waiting in terms of investments across the board, right?
Same.
So Square and not PayPal, but Square and ARC and Amazon, and those are all still pretty green. Tesla under the 800 mark and all those things. I'm just kind of waiting on now, just letting the cycle work itself out.
Do what it do, baby.
Yeah. I think that's I love seeing the volume that's coming in here at the lows. It's what I like to see. So it still leaves me in a fairly good position, but I'll put stops in on some of these names that I am up 20-30% on already and wait for them, right? And then things like Home Depot, I'm just going to let the seasonality play out here. All right. And
last thing I have is Bitcoin. I've been using Bitcoin as sort of a tail on what I think is going to happen. And, I'm starting to see more of, Bitcoin to 20,000 posts as of late. And while this action that happened here was not ideal, right? Like, that's not ideal, right? But at the same time, it didn't really break. And this comes back to our, what we were saying a few minutes ago, was nothing looks great, but nothing looks terrible, right? Like, it's not like going to zero into the world type of deal.
Yep.
Because I look at Bitcoin and, I've preached about this incessantly until the 21 EMA is lost, and it's lost right now. But, it's about $1,000 off of it. And that's not a huge move to get back up there. It's 2%. And we know Bitcoin can move well more than 2% in any given week. So, it's not close. We still have time, but we're not closing at the lows just yet. But at the same time, as I've mentioned, the way I look at the EMAs is it's kind of to be expected to have some pause and some, gathering of price action when you're trying to cross these EMAs over. And the 21 hasn't crossed below the 50, which is good. And I'm just going to put these on here while they have flattened out. All's not lost, and it wouldn't take a lot to get all this back above and the 9 crossing over both of those. So we'll see how that plays out over the next couple weeks, but I'm not in the all is lost camp, and I'm not in the everything looks terrible camp. But like we said, it's hard to be high conviction to put new money to work right now, especially when you bought lower earlier.
Yeah, exactly. Because it can go sideways for a long time. I think if you can bring up, or I can share my chart. What I am watching is the 10-year rates, the TNX.
Go for it.
Okay. So if you can, do you see the TNX, right? This is the 10-year rates.
Yep.
Is it too small, or should I make it bigger?
Yeah, you can make it bigger. That wouldn't be bad.
Yeah. Right. So this is the TNX. It's hitting the weekly kind of 2.5 standard deviation. It's the downtrend that it kind of broke. It's overshooting to the upside. But we're still well below like the 2018, if you're looking here, 2019 highs, when QT was already in place, right? This is the 2018, like December timeframe right here. All right, if you're looking at this area, and we haven't even crossed that, and we're, I would say, fundamentally in a worse position, right, with inflation running high and all that stuff. So to me, this is kind of relative weakness on the time frames, right? Where we just started QT this week. So it's $95 billion a month or something like that on the balance sheet runoffs. They haven't done any intraday kind of intermeeting hikes and stuff like that. And we still haven't broken those 2018, 2019 kind of levels. So, and we're running into kind of a parabolic move, right? This is huge for 10-year notes, 10-year rates, sorry. So what I'm watching for here is to potentially see a break in pattern, hitting some extensions here. And you can see that while we were here in this kind of range in 2021 on the 10-year rates, we were making relatively stronger move up, right? And as we're well above that level, which is 15, we're almost double that here at 27. We're not making the same kind of stronger moves. So just something to watch, that this could potentially break on maybe the CPI numbers or whatever. You're also hitting multi-decade kind of trend line and resistance. And so I'm looking for a relief here in the 10-year rates. And if that comes down, then you should see better kind of bullish price action. So that's what I'm watching here. And I was talking to Monkey Banana Genius, and we were talking about the 200 weekly SMA and how far the Qs are extended above the 200 weekly SMA. And if you're looking at the TNX, this red line right here is the 200 weekly SMA. As you can see, that's a solid slope down, right? And right now, from here to here, we are 57% above a downward sloping 200 SMA, right? So the question is, to me, it's going to break. The question is when, right? And when that breaks,
the Qs aren't that far away.
Yeah, exactly.
The Qs are like 25%. Oh, sorry, 35%.
Yeah, I thought it was like 37%, but I could be wrong. Yeah, so like versus like extended, to me, this is what's extended, right? XLE is what's extended. Qs are not extended. They're weak for sure, don't get me wrong, but they're not extended. And this is
Yeah,
the
XLE's 45%.
yeah, and the extension here is also off a downward sloping SMA. This huge move over the last like 6 months, and we still have a sloping down SMA like that. That tells you how terrible rates have been for so long, right? It's going to take a lot of work to kind of get up there. So what I would expect here is a break in 10-year rates to kind of come back and maybe retest this area here, right? The midline comes up to here, this consolidates up, and then this starts sloping. The SMA finally starts sloping up because it spent multiple weeks above like this 17 range, and it starts to pull up. So this is the one I'm watching just for overall kind of extension, and that's kind of what I'm looking for. I wanted to share the Q chart. Can you see this or no? Hold on.
I'm still on the TNX.
Yeah, so I got to share that one.
Futures are about ready to open up too, so it'll be interesting to see what happens here. I'm fully expecting it to be down.
Yeah. So can you see this now?
Yep.
Right. So this is what I was talking about in terms of like, this was that capitulation move. You have this kind of bounce off that, create like a head here.
Oh, wow. Gap up.
Yeah, whatever. I'm surprised. I don't trust futures right now, which is
we'll see how it looks in a few hours. But yeah, it popped up. That was a little surprising to me.
That is surprising. What I will say is that the market has been really great in providing the action during real-time hours versus like for years we've been gapping up and gapping down. Remember the metric? I think 75% of the move happens overnight.
Yep.
And over the last few months, it's been all real time, the down or the up.
I think we mentioned that last week or week before. Absolutely. I've noticed that too. Okay, here we go. We're trying to close that gap now.
So here's the cue while we work on futures, right? So my thought process was you had this big kind of wave one move and an ABC correction into the wave one move, coincided with the 200 SMA, and we had a initial move down, a thrust up back into 200, reject, and then we held, or worse, kind of at the 50-day here. We could retrace to around here, maybe a little bit lower. But what I noticed was just as the price was kind of working itself out, you can see that the relative strength was a lot greater, right? And we're coming back and testing this base here. So this is what I was talking about earlier in our call. It's just something to watch. You have a potential inverse head and shoulders. Not that I really care about any of that.
Did you share this on Stock Twits earlier?
I did. Yesterday I shared it. So this is what I'm kind of watching for. As miserable as the price action was all like basically the last 4 days of the week, it's still pretty constructive. So until you kind of break this capitulation low, I'm still in the we go higher camp.
Yeah.
Futures are doing better, right?
Yeah, they
are. That's a surprise but this has been the constant theme. Whenever we close at the dead lows, we gap up.
Yeah, that's true.
Whenever we close at the dead highs, we gap down. So every time someone gets bullish, you get smacked in the face. Every time someone gets bearish, you get slapped in the face. You're getting Chris rocked every time any move happens.
Chris rocked. That's good, GP. That's good.
All right. I think that's as much as I have. We're still in like holding patterns in a lot of
no, and GP, I always gotta thank you every time. I appreciate you so much, brother. I think it's great. I don't always remember to plug you, but GP's got a service too. He helps you with a lot of this stuff, gives you some great resources. So check GP out. GP, you want to hit him with the site?
Yeah, it's 360tradingview.com. I appreciate the the plug bags. I'm not a big promoter, so if you want to come learn, we talk about this stuff in lots of details. I'm constantly sharing charts and thoughts and stuff like that. And if you want to improve and you want to see things that we're seeing, learn, come join us. It'd be great to have you. If not, no worries.
Yeah, and GP, I always appreciate you being here. Dropping some new stuff on my head. I mean, I really appreciate the extension over the 200 weekly. Of course I would have known that, the Qs are up over that by a significant margin, but after seeing, bonds and the energy, like, yeah, it just it puts you in a different frame of mind of what overextension really is. And, just like, oversold and overbought, things can stay in that state for a while, but they eventually return to the mean. Um,
Oh, always, right? Like it might be another miserable month or two or three before it happens, but it all comes back down. And it's interesting watching like one sector after the other having their parabolic kind of moves overall. If obviously you've been watching over the last 6 months, but every kind of like you had lumber breakout hardcore, right? And
yeah,
then lithium, and then it just one after the oil obviously went bananas, and then oil has been sideways for a month now, or if not longer. So it's been interesting to see a lot of the parabolic moves, and those are the ones that actually concern me when you see each sector kind of having its parabolic move. But stuff to watch. We haven't broken anything yet, so can't get too bearish, and we haven't broken to the highs, so can't get any bullish. But the news is inherently getting worse and worse across the board, yet we're not breaking down. So we could be in the camp that we got a couple years sideways like this.
could be. It'll be great to have Nick back next week.
Will be.
I fully anticipate being able to, be back with another TA report. But as I alluded to earlier, I've got some things going on in the personal life. I think we are getting ready to move. I'm taking on a new opportunity with my day job. So some fluctuation, some life changes happening in the Bags household, but totally anticipate still being able to pull these things off. And GP, I always appreciate you being here. And Nick, we can't wait to have you back, buddy.